Starbucks is down 6.5% after reporting earnings. The stock is down 13.5% on the month, while the market in general has been recovering. The stock is still down 13.5%. It's really, really bad. Earnings, they weren't very encouraging. It was a disaster pretty much. So I'm going to talk about Starbucks. I haven't talked about it in a long time. So I'm going to let you know my opinion. If I believe this is presenting some kind of a generational buying opportunity on a company like Starbucks, or maybe Starbucks is just overvalued. It's really overhyped, and maybe we should wait for a lower price. So I really hope you enjoy it as always. But for Starbucks, they had a massive miss on earnings per share, 41 cents versus 49 cents expected. Same thing for revenues. They also had a decent miss on revenues. If we look at global same-store sales, they declined 1%, 2% in the US, and 0% in China. Very, very bad. Operating margin, 8.2%. That's much, much lower than before. It has declined 450 basis points. Earnings per share has declined 38%, and it's really terrible. I don't know about you guys, but I'm not seeing the turnaround. We've been waiting for this turnaround for a while. The CEO joined in, I believe, from Chipotle. He was the previous CEO of Chipotle, and even though he did promise a turnaround, so far it hasn't happened. Such turnarounds, they don't happen very quickly. They tend to happen 2 to 3 years, but many of the analysts and many people believed it was going to happen in like 6 months to a year or whatever. But that takes much, much longer than expected. But if we look at the income statement, total net revenues increased 2.3%, but store operating expenses have increased 12.1%. Why does that increase so much? And I did read it in the report. The CEO said it's something about the Back to Starbucks event or whatever, and something was in labor. So it was mostly labor kind of stuff. So most of it is likely permanent. Now, 12% increase, I don't believe that was a very smart move from the management at this stage of the turnaround. I don't know about you guys, but I don't believe that was very smart from the management. And this has really killed the operating margins or in total of Starbucks. But the only problem is it is likely going to get worse for the company, because the company also faces external challenges that could hit earnings. President Donald Trump's new tariffs will likely affect coffee beans. About 10 to 15% of Starbucks products and distribution costs come from green coffee or raw, unroasted beans. So there are also tariffs on beans. They're going to also affect Starbucks. They might be able to pass down some of the costs, but it's going to squeeze their margins. So in total, I don't know, guys. I'm going to get into my model, but so far, I'm not optimistic at all. I'm not seeing the turnaround, and I'm not getting excited at all. And if we look at the total shares outstanding, they pretty much went up on the quarter. So the company isn't even buying back stock. And I think they should have been buying some stock on this dip. They haven't bought back any stock, which I believe is bad. But the company isn't in the best position to buy back stock, because in cash and cash equivalent and short-term investment in total, they have about $3 billion, okay? But they have $13 billion in debt, and they have a 3% dividend to maintain. So they're not in the best position ever to be buying back stock, and they might not be able to buy back any stock during this pullback, which means they may not be able to take advantage of those low prices and create value for shareholders for the very long term. Whenever a company like that is suffering their restructuring, I like them to buy back stock, especially if they believe the stock is undervalued. Maybe they don't believe the stock is undervalued, and that's why the company hasn't bought back any stock. But if we look at the multiple, Starbucks right now is trading around 28 times earnings. But this is before the 6% pullback. After the 6% pullback, it's maybe 26 to 25 times earnings. Still, 26 to 25 times earnings for all those risks, for everything that's happening relative to other opportunities in the market. It's really not attractive at all. There's way better opportunities in this market. It just doesn't look attractive at all. But I am going to get into my valuation model. And for my valuation model, I tried to look for the analyst estimates. They expect a decline of 13% in earnings per share this year, then a 22% jump, 18.5, 29, 16. I think that's too optimistic. I don't believe Starbucks will ever grow 22% again. I think those years are kind of behind them. And I think the turnaround is likely taking longer than people expect. So I think 20 and 80 and 29%, those numbers are too optimistic. So what I did for my valuation model, I took into consideration the 13% decline for 2025. And after 2025, assuming the turnaround does happen, I'm expecting 15% in earnings per share growth, which I believe is optimistic and I believe it's fair. I'm not betting on 25%. I think 15% is much more realistic than 25%. Now, using 15% and 25 PE, which is a stock right now is likely trading at 25 PE. So this is assuming no multiple expansion, no multiple contraction, and the 3% dividend. I'm getting around 74% on the upside or 12.8% CAGR over the next 5 years. I don't know about you guys, but 74% on the upside over the next 5 years doesn't really excite me in this market. I mean, it's really not bad. It's not bad in general. But in this market, you have so many better deals. Google, Amazon, so many better, even Meta. There are so many better deals in this market. Maybe if the S&P was at 7,000 or 7,500 and Starbucks was at 79, I'm like, okay, that looks very interesting. But relative to other opportunities, I'm just not seeing it. So if I want to double my money over the next 5 years, which I personally like to do that, I like to get a minimum of a double every 5 years, I have to buy Starbucks around $63 per share, which is much, much lower than the current price of $79 per share after the 6% pullback in the after hours. So in other words, I believe there's way better opportunities in this market. If I was dying to buy Starbucks, I wouldn't pay more than $65. I mean, anything, below $70, I'm like, okay, I can somewhat digest that. But 79 or even the 80s, mid 80s, I think that's too expensive. And I think there's way, way, way better opportunities in this market today. And that's just my opinion on Starbucks, not financial advice. I hope you enjoyed it as always. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.